Hello, welcome everybody. This is Candace Marley, owner and accountant with Bookkeeping Solutions 5280. So great to be talking to you today. We've been talking about the bookkeeping processes and practices that you should be using within your small business so that you have good financial data that is timely, that is relevant, and that is useful for your organization. So we learned all of that so that we could get to the place where we could run and analyze good financial statements. So what are the financial statements you as a business owner should get to know really well, at least on a monthly basis? Well, today we're going to be talking about two of those. And the first is your profit and loss statement, and the second will be your balance sheet. Now, you've probably heard both of those terms before. Your bank requires it when you ask for a loan. You may have needed it for income tax filing purposes, but do you as a business owner understand these reports and understand how to utilize them so you can make good management decisions and grow your business the way you want to? So first we're going to talk about the profit and loss statement. So we're looking at a cumulative profit and loss statement here as our example that covers the entire year. Now, you would want to be looking at this on a monthly basis at minimum, but if you have bookkeeping processes that are real time, you could run this as often as you would like. If you're managing things really tightly and want to look at it on a weekly basis, that would be a great resource for you. So the profit and loss tells us a couple of main things, and then we can get down into more detail with the statements. And we talk about that in another class when we really dissect the profit and loss statement. But the main things the profit and loss statement are going to show you are your income, how much you brought into the business, if you're at a product-based business, or if you have cost of services, what it will also show you is your gross profit after deducting any of your costs of goods sold. It will then show you your expenses, all of the expenses you had for the period of time, so all your money out and what those expenses were. Where did you spend your money? The bottom line is the difference between those two things, your income and your expenses, and that is either your net income or your net loss. Now we are looking at a startup type company who's expected to take a loss for a period of time. So we can see they had a significant net loss for the entire year. So you want to be looking at this. You really want to know how much money are you bringing in? Where are you bringing in that money? Maybe you are selling products and offering services. You want to see those broken down. Or maybe you have different types of service income categories. So you want to see it broken down by income category so you can really focus on what's selling, what's not. What do your customers love? What don't they love? And where can you make management decisions to really start increasing your revenue? The next section, your expenses, telling you everywhere you spent your money. You want to manage this super tightly. You want to set a budget number and be managing by that budget number. Where are you going over budget? Where are you going under budget? Where are your big expenses? Where are areas you can start to cut down on those expenses so that you can increase your bottom line and over time have more and more net income? Now, when you're looking at the profit and loss statement, you also want to do a profit and loss statement by month and compare month over month. This way you can see trends. You can hopefully see where your income's growing over a period of time and your bottom line number is becoming more favorable with time. But you also want to manage, for cash flow reasons, what may be some slow times within your business? Where are the busy times? So that you really can start managing. If you're coming up on a slow season, how are you going to start setting aside money to meet your obligations during that time? So your profit and loss by month, looking at it month over month is extremely important. Okay, so we have the profit and loss statement that shows you what you're making, what you're spending, and the difference between the two. And then we also have your balance sheet. Now your balance sheet shows you a couple of different things. It shows you overall how much your business is worth. So that's extremely important. The balance sheet is broken down into what you own. So all of your assets, what you owe, your liabilities, and then whatever's left, what you own within the business, your equity. So your assets are going to include everything you own, things like your bank accounts, your accounts receivable, any inventory that you have, any equipment that you have, vehicles, furniture, fixtures, things like that. So what do you own? You really want to make sure you get everything that you own onto your balance sheet so that you can show that your business is worth something and that it's worth something to you when you look at it. Okay, nothing more depressing than looking at a balance sheet that doesn't have anything on it, that you don't own anything. So make sure you get everything that you own on there. Your next section will be your liabilities, things like your accounts payable, all your bills that are coming up, any credit cards that you have, any of your payroll liabilities like your payroll taxes. This could also include your sales taxes if you're selling products. So what sales taxes do you have outstanding and owe? Whatever's left is your equity in the business. So this will include all the investments that you have put into the business, everything you've taken out in the form of draws, and your retained earnings. So your net income and loss month over month or year over year throughout the history of your business. So the balance sheet is something investors and outside entities like banks really look at and analyze if you're looking for a loan or looking for credit. So you want to have a good balance sheet so that if you do ever get in that position, that you're giving your investors, you're giving outside entities a good picture of what you actually own and what you owe. Of course, again, you want to be looking at this at least on a monthly basis. Now, the balance sheet's going to change every single day. Cash is going in and out. You're paying off some of your bills and accounts payable. You're receiving money in accounts receivable. So look at it at the end of every month and do a comparison month over month. Hopefully what you want to see is that your assets or what you own, what your businesses own, is growing with time, while what you owe is decreasing with time. That way your equity in your business is growing and growing over time. Well, thanks so much for being with me today. I look forward to our next session. It's Candace Marley with Bookkeeping Solutions 5280, the Small Business Experts. Have a great day.